Good afternoon, everyone. Good afternoon, madam.
Good afternoon, ma'am.
Good afternoon.
Shall I visible and audible, madam?
Yes, ma'am. You're visible.
On behalf of the Professional Development Committee and the Task Force of Women Empowerment of the Western India Regional Council, the Institute of Cost Accountants of India, and under the chairmanship of PD Committee, CMA Arindam Goswami sir, and Chairperson Women's Task Force Manisha Madam, and our the leadership of the CMA Mihir Vyas Chairman WSA, I welcome all of you for the today's session of the Navratri celebration of Shakti of knowledge, power of transformation, CMAs leading in the new era. Today is a day 3. Our topic is CMA in sustainability, ESG, and green finance leading the transformation. Our today's speaker, CMA Sushma Singh Madam. She is a MCOM, BCOM, MBA Finance and Production Management, PhD, UGC, NET, PG, ICSI Executive. Madam has an experience of 12 years and more in a teaching in the Bhilai Institute of Technology, Durg, as an assistant professor. I welcome Madam and
Thank
request
you so much,
Madam
ma'am.
to kindly start the session, please.
Okay. Thank you so much, ma'am. Thank you so much.
Thank you.
Good afternoon, all.
Good
I,
afternoon.
CMA Sushma Singh, sincerely thank the Professional Development Committee in association with the Task Force for Women Empowerment of ICMAI-WIRC for organizing the special Navratri celebration webinar series on Shakti of Knowledge, Power of Transformation, CMA is leading in the new era. The vision and efforts in creating a platform that creates knowledge, empowerment, and leadership are truly inspiring. This initiative not only enriches the professional growth of CMAs, but also encourages transformative learning and women leadership in the profession. So I thank the Institute for their commitment to excellence and empowerment. Thank you so much. Now,
Thank you, Madam.
friends, let me share this. Okay. So, friends, it's always a joy to be in the company of fellow professionals. People who not only speaks but understands the language of numbers, efficiency, and accountability. And it's my privilege to be in a room full of professionals who are shaping industries, guiding businesses, and increasingly being called upon to play a role that is larger than financial management. Today, we are here to talk about something much larger than accounting entries, larger than annual reports, larger even than shareholder values. Am I audible now? Hello?
Yes, Madam.
Yes, ma'am. Okay. So we are here to talk about sustainability, ESG, and green finance, and more importantly, about the leadership role that we as cost and management accountants must play in this transformation. So we are here today to discuss something that is not a passing trend. It's not just only compliance, it's not just about ticking boxes, but about survival, competitiveness, and leadership in the modern economy. CMA in sustainability, ESG, and green finance, leading the transformation. So, now why is this important? Let me ask you a simple question. I request everyone to kindly answer the questions, okay, when I'll ask. How many of you think your clients or your organization will still be operating the same way in 10 years with the same resource use, same reporting standards, same expectations from stakeholders? Are the reporting standards same in last 10 years?
I feel there will be an improvement in our organizations for like
Yeah,
whatever efforts we put in, the
yes.
organization will definitely improve day by day, month by month, and year by year.
One, yes, yes. So we can say that definitely there is a change in some reporting standards. The stakeholders expect something different from us. Like initially, only the stakeholders wanted only profit maximization, wealth maximization, but now they have shifted. They have shifted definitely to sustainability, to ESG, to green finance. I can almost guarantee the question which I asked, that how many of us think that our clients or our organization will still be operating the same way in 10 years, and the same resource use with same standing reporting standards and same expectations from stakeholders. And I can almost guarantee the answer will be no. There's a huge shift. And why this shift is there? Because the climate risk, resource scarcity, investor demands, global regulations, they are all converging. And professionals like us, cost accountants, are not only the sideliners, we are at the heart of it. Like for decades, our jobs was clear, very clear. Like what? It was like to track costs, improve efficiency, protect margins. But the ground beneath us is now shifting. The new battlefield is not just profit and loss now. The new battlefield is people, planet, and prosperity. Think about it, like in boardrooms across the world today, CEOs are no longer just asking what is the EPS or what is the profitability, what is the liquidity. Now, what are they asking? They are asking what is the carbon footprint? How resilient is our supply chain? How sustainable is our financing? And that's where we come in. That's where we come in because nobody is better equipped than a CMA to translate sustainability into measurable, verifiable, and actionable numbers. So, let me begin with a quick question. How many of you have been asked in the last 1 year, either by a client or by a company or even by a student, about ESG reporting or sustainability disclosures? I think many of us are being asked about these things, ESG reporting and sustainability. What are they? So, exactly, it's no longer an optional buzzword. It's a compliance requirement and investment criteria and a reputational necessity. So, since today is the day 3 of Navratri, so just like the goddess Chandraghanta symbolizes balance and courage, CMAs today must also balance financial performance, regulatory compliance, and sustainability, and have the courage to lead transformative ESG initiatives. So let's begin by clarifying the terms of our topic, that is sustainability, ESG, and green finance. May I know what do you all understand by these words, sustainability, ESG, and green finance? Please answer. What do you understand by these terms, sustainability, ESG, and green finance? Can I expect the answers from our CMAs? If you're not comfortable, you can write in chat also. See, I think nobody is interested in answering the questions. Okay, fine. So, sustainability, ESG, and green finance. These words are interrelated, but again, they are different. How they are different? Let us understand what is sustainability. Sustainability is the broad umbrella which says meeting today's needs without compromising tomorrow's need. Like sustainability is what? It says we should meet the today's requirement without compromising tomorrow's requirement. What is ESG? ESG is environmental, social, and governance. It is the way investors, regulators, and markets measure sustainability performance. And what is green finance? Green finance is the flow of capital into projects, businesses, and innovations that support sustainable goals. So, over the next hours, we are going to travel together through three landscapes. What are they? Why ESG and green finance are becoming central to business, how CMAs can take the lead in this shift, and what practical tools, frameworks, and case studies we can adopt starting tomorrow. So, all right, let's begin with the first leg of our journey, the global shift. The global shift. Why ESG and green finance? So, friends, let's step back. Why has sustainability become the boardroom's favorite word? Can you answer? Why has sustainability become the boardroom's favorite word?
I think the ESG report is also mandatory now in our
Yes,
financials.
yes, ESG report is mandatory. So, see, but why is it so urgent nowadays, like the global shift? It's not only in India, it's around the world where the focus of uh, companies are shifting from not from profit and loss to this ESG and sustainability and green finance. So, the first reason, the question to answer is why has sustainability became the boardroom favorite word. The first reason is climate change. Whether we like it or not, climate risk is now financial risk. Agreed? Climate change's risk is now a financial risk. Agreed with my this line? Can we be more interactive?
Am I audible?
Yes, yes, you are audible.
Yeah, yeah, yeah.
Okay. So the line which I am saying, ki whether we like it or not, climate risk is now financial risk. Are you all agreed with my these words?
Agreed.
Agreed. Why? Because a cyclone doesn't just uproot trees, it uproots supply chains. A drought doesn't just dry fields, it dries cash flows also. So investors have now woken up to this reality. Second, global commitments like the Paris Agreement, the COP summits, the net zero pledges by 2050 or 2070. India has pledged net zero by 2070. मतलब 2070 तक इंडिया ने प्लेज किया है नेट जीरो एंड what does that mean? That means companies, whether they like it or not, must cut carbon emissions, shift to renewables, redesign supply chains, and these are not just political speeches. They are shaping laws, markets, and investors behaviors. Now, third is regulation. As we all know, Europe has introduced the Corporate Sustainability Reporting Directive, CSRD. The US SEC is tightening climate disclosure rules. The IFRS has created the ISSB standards, IFRS S1 and S2 to bring uniformity to sustainability reporting. So, and here in India, we are not lagging behind. SEBI has introduced the Business Responsibility and Sustainability Report, the BRSR. Top listed companies must now disclose not just profits, but also their environmental and social footprint. The RBI has started pushing banks to integrate climate risk into their lending models. And rating agencies like CRISIL and ICRA are giving companies ESG ratings that directly affect their access to capital. So, as we all know, BRSR is not optional now. And for those who didn't raise, uh, because tomorrow SME clients will face ESG disclosure also, where SME clients demands from the larger buyers in the supply chain. So we can say that the BSR reporting is not optional nowadays, and this wave is coming for everyone, not for only large companies, small and medium enterprises. They all have to follow BRSR reporting. So globally, ESG assets under management are already 35% of total global AUM. That's trillions of dollars of investment being directed only to companies that show credible ESG performance. So nowadays we can say that ESG performance के ऊपर बहुत ज्यादा लोग फोकस कर रहे हैं. लोग मतलब मैनेजमेंट, लोग मतलब गवर्नमेंट, कंपनीज, ये सारे लोग अब ईएसजी परफॉर्मेंस के ऊपर, रादर इन्वेस्टर्स आर आल्सो फोकसिंग टुवर्ड्स ईएसजी परफॉर्मेंस. लेट मी गिव अ केस एग्जांपल लाइक इन्फोसिस. मैंने बताया ना अभी आप लोगों को, जैसे कि कंपनीज, गवर्नमेंट ही नहीं, कंपनीज, इन्वेस्टर्स सारे के सारे अभी ईएसजी के ऊपर फोकस कर रहे हैं. व्हाई? लाइक इन्फोसिस, दे बिकेम कार्बन न्यूट्रल इन 2020, well ahead of schedule. Did their market reward them? मतलब क्या उनको उससे reward मिला? Absolutely. Investors poured in. Clients celebrated them. Employees felt pride. Similarly, Tata still has tied up ESG-linked loans where the interest rate reduces if they meet sustainability targets. So, what's the message we get from this? That sustainability is no longer a CSR charity. It is a financial strategy now. It affects the cost of capital, brand reputation, employee retention, and long term survival. Now, just a question for you all. If a client came to you today and asked, why should I invest in ESG reporting? It doesn't generate immediate revenue. What would you tell them? आप क्या बताएंगे उनको? अगर कोई क्लाइंट आपके पास आता है और पूछता है व्हाई शुड आई इन्वेस्ट इन ईएसजी रिपोर्टिंग, इट डजंट जनरेट इमीडिएट रेवेन्यू, व्हाट वुड यू टेल देम?
So according to me, first point here is to mention the sustainability
Yes,
and the impact of the, because based on the environment. That is first point. Second is obviously the ESG reporting is also now mandatory. So these are the two
mandatory.
aspects.
Yes, exactly. Because the cost of not doing it is far greater. When we are doing ESG reporting, that's it is taking some cost. But not doing is more costlier because of regulatory penalties, loss of investor trust, customer boycotts. So in finance, risk is cost, and ESG is the new risk language. That, friends, is the global shift which I was talking about. So companies are being forced by the investors, regulators, and consumers to move from profit at any cost to profit with responsibility. And in this transformation, the accountant's role is changing from being counter to green counter. So sustainability in business is no longer optional. Today, the market regulators, investors, and society all expect companies to operate responsibly. And this is not philanthropy, it's strategic. So, ESG, environmental, social, and governance, is now the global benchmark for measuring how sustainable a company operates. To give you perspective, global ESG assets under management are projected to reach are projected to reach 34 trillion US dollar by 2026. I again repeat, Global ESG assets under management are projected to reach US dollar 34 trillion by 2026 according to PwC. And that's a huge portion of global capital moving towards companies that perform well, not just financially, but also in their social and environmental impact. Now, closer to home in India, SEBI has mandated the BARSR, Business Responsibility and Sustainability Report, for the top 1,000 listed companies. This means that for these organizations, sustainability reporting is now a compliance requirement, and what is being measured will directly impact investor confidence, funding, and long term business viability. So, now where does green finance fit into this picture? Can anyone answer? Where does green finance fit into this picture? Can anyone answer? Where does green finance fit into this picture? Like for sustainability, we have to do green financing. Why, where is it fitting? Anyone? So, okay, let me tell you, green finance is the engine that enables companies to transition to a low carbon economy. It's about channeling capital into projects that reduce emissions, conserve energy, and create sustainable infrastructure. So, instruments, can you name some of the green instruments? I have more than 20 people in the chat. Can you please tell me what are the instruments which we can say are green instruments? Anyone? Okay, so instruments like green bonds, sustainability linked loans, and carbon credits are not just buzzwords. They are becoming central to business financing strategies. And here's where CMAs are critical. ESG metrics are no longer peripheral. They influence credit ratings, investor trust, valuations, and even cost of capital. As cost accountants, we are uniquely positioned to quantify, monitor, and assure these metrics. We help translate sustainability into actionable, measurable, and financially relevant information. So finally, let's reflect on two principles that define our role in this transformation. So what are our role? Being CMA, what are the role? So balancing. What do we have to balance? We have to balance the managing the triple bottom line, people, planet, and profit. CMAs must ensure that business decisions consider social and environmental impacts alongside financial outcomes. And next is courage, leading change in traditional finance system. Many organizations are hesitant to adopt new ESG frameworks, but as professionals we have the knowledge and credibility to drive this shift. In essence, this is a moment of opportunity. As a CMA we have the opportunity. This is the moment of opportunity for us because the companies that succeed tomorrow will be those that embrace sustainability today, and CMAs are at the heart of enabling that success. So we have this opportunity. Now, the CMA's role in ESG and sustainability. Now that we have understood the global shift, like I told about the climate change, I told about the ESG reporting, BRSR reporting. So this is the global shift. And let's get practical. Let's ask the most important question: where do we as CMAs fit into this story? I already told you, like sustainability is full of good intentions. Every company loves to talk about saving the planet, but good intentions don't change balance sheets. What changes them is measurement, costing, analysis, and assurance. And that's where we are there. Who will measure the cost? Who will measure the cost? Who will design the models for carbon pricing, energy efficiency, and waste management? Definitely accountants, but not just any accountant, we the cost accountants, because we understand resource optimization better than anyone else. So let me walk through 5 critical roles where CMAs can lead, or we can say the tools and techniques for CMAs in ESG. Carbon accounting and carbon costing. So, friends, the world is moving towards a carbon tax regime. Even if it's not directly here yet in India, it's already happening in Europe. The European Union Carbon Border Adjustment Mechanism will impose levies on exports from India if they carry a high carbon footprint. Now tell me, who in an organization can calculate the footprint in monetary terms? Who will calculate that footprint in monetary terms? Who can trace emissions across procurement, production, logistics, and distribution, and then assign cost to it? Not the marketing guy, not the HR manager, it's us, the CMAs. So if our client exports steels to Europe, we can quantify how much extra cost will hit them if they don't decarbonize. And that's powerful advice, and it can save the companies crores. Second, sustainability reporting. Boards and regulators don't just want glossy CSR brochures anymore. Like initially it was CSR reporting, but now it's BRSR. So boards and regulators not don't just want now CSR brochures anymore. They want auditable, number-driven sustainability reports. Take SEBI's BRSR core disclosures. Companies must now report on greenhouse gas emissions, water intensity, gender diversity, and more. But these are not just numbers. They need consistency, comparability, and assurance. Again, who better than a CMA trained in financial reporting, costing, and compliance to step in and design these reporting systems, validate data, and assure credibility? So, again, here for sustainability reporting, we come as a CMAs. Now, green costing. We are talking about how CMAs, what are the CMAs' role in ESG, or the tools and techniques for CMAs in ESG reporting, or we can say the critical roles of CMAs. So third is green costing or life cycle and activity based approaches. This is where our technical toolkit shines. Think of life cycle costing. Instead of just looking at the purchase price, we evaluate the entire life cycle: acquisition, operation, maintenance, disposal, and environmental impact costs. Similarly, activity-based costing can now be extended to include environmental overheads. For example, the waste generated per activity or the energy consumed per unit. See, these activity based, we normally do activity based costing in our, we have studied ABC, activity based costing, in our inter. Then we are applying it also in the organizations where we are working, or guiding the clients to do costing in on these basis. But Here again, in ESG reporting also, we can do the same thing, like extending activity-based costing in environmental overheads, like the waste generated per activity or the energy consumed per unit. Like like we are advising a company, just for example, we can advise the company that if you switch your fleet from diesel trucks to electric vehicles, your life cycle cost over 10 years reduces by 18% and your ESG scores improves. So these are the types of advice we can give to the companies. Now, next is assurance and verifications. This is the silent revolution. Just like statutory auditors verify financial statements, there will be ESG assurance professionals who verify sustainability disclosures. IFRS, ISSB, and SEBI are moving towards mandatory assurance. It's a brand new service line for CMAs. Like CMA, we as CMAs, we have many roles, but these are the roles which are emerging now. Like IFRS, ISB, and SEBI are moving towards mandatory assurance. So we can provide these assurance by our ESG reporting. It's a brand new service line for CMAs. We can become the independent validators of sustainability reports. And this is not futuristic, it's happening now. Decision support for management. Finally, the most strategic role for being a CMA, being the CFO's right hand for ESG linked decisions. For example, should we invest in solar panels or continuing buying power from the grid? These are the models, yeah, these are the questions we can put up. Should we redesign packaging to a biodegradable even if the initial cost is higher? Or should we issue a green bond to finance a project? All these are decisions which we can take or which we can guide the CFO to take for ESG linked decisions. Each of these requires financial modeling, ROI analysis. These questions will definitely require financial modeling, ROI analysis, cost benefit assessment, and definitely we being CMA, we will do all these things: financial modeling, ROI analysis, and cost benefit assessment. We will do all these things. Now we will, or what next we can do as a for ESG reporting, we can do integrated reporting, bridging financial and non-financial data, then sustainability performance, designing KPIs that blend cost and ESG, green investment appraisal, evaluating IRR, NPV of renewable efficiency projects, risk management, quantifying climate risk, impacts on business continuity. So these are the things which we can do or which we can use as tools and techniques for ESG reporting. Anyone want to add something? Any of my friend want to add something? Okay. So friends, let's summarize the tools and techniques for CMAs in ESG reporting. We are not outsiders to ESG. We are the central players. And carbon costing, sustainability reporting, green costing, assurance, and decision support, these are all natural extensions of what we already do. These are not new things. Just these are the extension of what we are already doing. The world is waiting for professionals who can combine financial expertise with sustainability insight, and that is the CMA. And on that note, let's move to our next topic. ESG reporting frameworks and standards. Our next topic will be ESG reporting frameworks and standards. So, Now that we have seen why ESG matters and what role a CMA can play, let's look at the backbone of all this, the frameworks. Without frameworks, ESG reporting is just storytelling. With frameworks, it becomes credible, comparable, and decision useful. Now, how can we say framework is helpful? Think of it like accounting. Imagine if every company had its own definition of revenue. It will be a chaos, right? So similarly, without common ESG standards, one company's carbon neutral could mean planting 2 trees, while others could mean overhauling their entire energy system. So let me introduce you to the key global Indian frameworks which we must know. Global Reporting Initiative, GRI. GRI, Global Reporting Initiative. GRI is like the grandfather of sustainability reporting. Established in the late 1990s, it provides detailed sector-wise metrics for sustainability. Almost every major company globally refers to GRI standards in some form. For example, Infosys, Tata Motors, and ITC in India align their reports with GRI. And what should we know? GRI is broad, stakeholder focused. It covers everything from carbon emission to labor practices to community impact. Next framework is SASB, Sustainability Accounting Standards Board. If GRI is broad, SASB is laser focused. It asks what ESG issues are financially material to this industry. For example, let me clear it. For example, water usage is material for a cement plant, but not for a software company. Data privacy is material for a bank, but not for a textile mill. So SASB gives sector specific metrics, 77 industries in total. What CMA should know? We know that SASB is investor focused. It speaks the language of capital markets. Next is next framework is TCFD, Task Force on Climate Related Financial Disclosures. This is one we'll hear again and again. Have you ever heard TCFD? May I know? Have you all heard TCFD? Have you all heard
No,
TCFD, Task Force on Climate Related Financial Disclosures?
no, not it. Can you please elaborate?
Yeah. So TCFD focuses purely on climate. It asks companies to disclose how climate risks and opportunities affect their financials. And its four pillars are governance, strategy, risk management, metrics, and targets. These are the four pillars of TCFDs. For example, banks in India are beginning to integrate TCFD style disclosures into their annual reports because RBI wants climate risk incorporated into stress testing. So, TCFD is about linking climate impact to financial impact. And so, where financial impact comes, our role definitely comes in. So, TCFD is also a framework where we can use our expertise. Next is ISSB, which is ISSB. May I know the full form of ISSB? I think you all are listening. Please tell ISSB. What is ISSB? May I know? Anyone?
ISSB means International Sustainability Standard Board.
Yes. IFRS Sustainability Standards. Thank you so much, Dhananjay ji. Now, now
Yeah.
here's the game changer. In 2023, IFRS set up the ISSB International Sustainability Standards Board. they released two standards, IFRS S1 and S2. Then IFRS S1 is general sustainability disclosures and IFRS S2 is climate related disclosures. And these are designed to become the global baseline. Just like IFRS became the global financial reporting language, so does the ISSB became the global baseline for sustainability disclosures and climate related disclosures. And what this means for us, very soon Indian regulators and companies will be aligning with ISSB, and this is a career opportunity for all of us. Next framework is integrated reporting. Now, many of us have seen this, the IR framework by IIRC, now part of IFRS. Have you heard about integrated reporting? I think you all have. So, the IR framework by IIRC, now part of IFRS, encourages company to integrate financial and non-financial capitals. What are they? Financial, human, social, natural, manufactured, and intellectual. For example, Wipro's integrated report. I request everyone to kindly go when we are done with this session. Wipro's integrated report. You can go and check the Wipro's integrated report. It is a beautiful balance of financial and sustainability disclosures. And for us, this is about connecting dots between costs, resources, and value creation. Being CMA, we can do all these things because we know how cost will impact. We know how to calculate cost. We know how what will be the impact of costs, what will be the impact of climate. We all know we can relate all these things. So we have huge opportunity on these areas. Now, India's own frameworks, SEBI, BRSR, and BRSR core. And of course, our home turf, the Business Responsibility and Sustainability Report introduced by SEBI. As I already told you, top 1000 listed companies must disclose ESG performance. In 2023, SEBI launched BRSR Core, a limited set of key indicators that require assurance. And what are they include? Anyone? Can you tell that the SEBI which launched that BRSR Core, what are the components or what does it include? Anyone? A single point will also do. The SEBI launched BRSR code, and it is a limited set of key indicators that require assurance. And they include greenhouse gas emissions, water intensity, gender diversity, job creation in value chain, and social impact. So let me ask you all, out of these frameworks, which do you think Indian companies are struggling the most with? GRI or SASB or TCFD or ISSB or BRSR? Out of these frameworks, which I told you, GRI, SASB, TCFD, ISSB, and BRSR, which do you think Indian companies are struggling the most with? Anyone? Just your viewpoint. What do you think? Companies are struggling with which of the frameworks? Most of the companies are comfortable with GRI because it's narrative heavy. But when it comes to SASB or BRSR core, where hard numbers and assurance are needed, they struggle. And definitely here comes our role being CMA. We can do SASB reporting, BRSR reporting for the companies. So I hope I must be clear that how CMA's role is emerging, how CMA's roles are emerging in ESG reporting, sustainability, and green finance. So as I told you, after the session, you can go and just check out Wipro's integrated report or HDFC Bank's ESG disclosures. You'll get many good things from there, like how they quantify their carbon footprint and how they link it to their business strategy. So we can say ESG is no longer a one framework, it's a blend. And clients need professionals to interpret and navigate these standards. So here comes our roles as the what is the name of the session? Leading the transformation. CMA leading the transformation. So this transformation from primitive to modern ESG reporting, we are here to lead the transformation. So friends, let me summarize this. The framework GRI is broad. It is very broad. SASB is sector specific and investor focused. TCFD is climate specific. ISSB is the new global baseline. IR connects financial plus non-financial, and BRSR is India's mandatory framework with assurance. So we can say we have 6 frameworks to follow. At present, we have 6 frameworks from all over world to follow. And see who can connect to all of this into one meaningful auditable report, the CMAs. We being CMAs, we can connect all of these things with specific cost measurement. So now let's shift and talk about the money side of things. Here we have talked about ESG reporting and framework and why the ESG reporting is important. We have talked about all these things. But now when it comes to uh, business, finance, we all know is a lifeblood without which a business cannot run. So let's shift our gears and talk about the money side of things, because sustainability without finance is just a good PR, but sustainability with finance becomes transformation. And what we have to do, being CMA, we have to lead the transformation. So sustainability with finance becomes the transformation. So let's enter the world of green finance. What is green finance again? I have already told you once. Please repeat. Can you tell me what is green finance? Anyone? Can you tell what is green finance? Anyone of you? Can you tell what is green finance? Okay. Green finance. What are they? So friends, now that we have discussed frameworks, let's talk about the bloodstream of this entire transformation, which is finance. Because let's face it, no matter how many climate pledges a company makes, unless the money flows in the right direction, nothing moves. And here's the exciting part. Global capital markets are already shifting now. Investors are saying, don't show me just profits, show me how green your profits are. So this shift has created an entire ecosystem which we call as green finance. So, what are green finance? So, number one is green bonds. Let's start with the most popular instrument, green bonds. These are the debt instruments issued to finance projects with environmental benefits, renewable energy, clean transport, water management, and waste reduction. For example, the World Bank has been issuing green bonds since 2008. And India too has joined the club in 2023. Our government issued its first ever sovereign green bonds worth rupees 16,000 crore in 2023. And what's the beauty here? Here, investors get a bond with stable returns, while the issuers get access to capital at potentially lower cost, plus the ESG reputation boost. So it's a win-win situation for everyone. Now, here I said, ki the money which is raised will be used for green projects. Now, who will certify that the money raised is actually used for green projects? Who will certify? Who will measure and report the outcomes? So, friends, that's a perfect service area for us. We, being CMA, we can uh, definitely certify that the money which is raised in the name of green bonds is actually utilized for green projects or not. We will measure the report, we will measure and report the outcomes. So, being CMA, we have these opportunities. Now, sustainability bonds and blue bonds. We are talking about the green instruments, sustainability bonds and blue bonds. Beyond green, we now have sustainability bonds covering both environmental and social projects. For instance, affordable housing, healthcare, education, along with climate initiatives. And then there are blue bonds specifically for ocean related projects like marine conservation, sustainable fisheries. Seychelles was one of the first countries to issue them. Can you repeat after? Can you tell me, if you're listening, which is the first country to issue blue bonds? It, which is which
2300 or 1900.
which is the first country to issue blue bonds? May I know which is the first country to issue blue bonds?
Yes, it's Shirachil.
Yes, it's the Seychelles. So Seychelles was one of the first country to issue blue bonds. And what are the blue bonds? They are the specifically for ocean related projects like marine conservation, sustainable fisheries. Now imagine the scope. India with its massive coastline could see blue bonds in the coming years. At present, I think it's not in India. But in coming years, they will definitely come in India because we have massive coastline. And again, CMAs can structure these instruments, ensure compliance, and monitor fund utilization. So, see, being CMA, we can lead the transformation. That is the today's topic leading the transformation. ESG reporting, sustainability, and green finance. So we have many opportunities in these fields, these areas. Next is sustainability linked loans, SLLs. Here's an interesting one, sustainability linked loans. Unlike green bonds, which are tied to specific projects, sustainability linked loans are linked to a company's overall sustainability performance. Sorry. For example, if a company achieves a 20% reduction in carbon emissions, the loan's interest rate drops by 25 basis points. So Now, case here is Tata Steel tied up such a loan. Their financing cost literally depends on their ESG performance. Just go through once the Tata Steel का ESG performance आप देख लीजिएगा, and their financing cost literally came down just because of ESG performance. So this creates a direct measurable financial incentive to go green. And who calculates the metrics? Again, verifies compliance and reports to lenders. And that's right, we being CMAs, we do all these things. We we calculate the metrics, we verify compliance and report to the lenders that we are now our ESG performers. Okay. So next is carbon markets and carbon credits. Now let's talk about carbon markets, one of the most exciting yet misunderstood areas. Can you tell me what is carbon markets and carbon credits? Anyone can tell me what is carbon credit and carbon markets?
Actually, carbon credit is a tradable certificate, basically,
Okay.
based on the carbon emission.
Yes, that's right. So companies, let us understand what is carbon markets and carbon credits. Companies that reduce emissions below their permitted levels can generate carbon credits. So the companies that reduce emissions below their permitted levels can generate carbon credits, and these can be sold to other companies who are exceeding limits. So think of it like a marketplace for emissions. A cement plant that invests in carbon capture can sell credits to another that's struggling to decarbonize. So in India, we are moving towards a regulated carbon trading market. The Ministry of Power and Bureau of Energy Efficiency are already working on it. And for CMAs, this is a new domain. What are the new domain? Calculating emissions, certifying reductions, valuing credits, advising clients whether to sell or bank credits. So it's a financial plus sustainability role rolled into one. See, so we have opportunity in this area also where we can advise our clients whether to sell or to bank our carbon credit. I hope everyone understood this carbon markets and carbon credits. The essence line is companies that reduce emissions below their permitted levels can generate carbon credits, and these credits can be sold to other companies who are exceeding their carbon limits. The basic idea behind this carbon market and carbon credits is this. Now, role of regulators in India. Now we have in India, we have regulators also. So SEBI and RBI are actively pushing in green finance. Both SEBI and RBI are actively pushing into green finance. SEBI has guidelines for issuance of green bonds, and RBI has flagged climate risk as a systematic risk for banks and financial instruments. What does this mean? This means very soon credit appraisal models in banks will include ESG risk assessment. So if your client is high carbon, their cost of borrowing will rise. So again here, we being CMAs can guide clients to prepare for green due diligence. Now, we have some global examples and lessons also. Globally, we have seen some powerful examples like Apple issued green bonds worth billions to finance renewable energy and recycling initiatives. Similarly, Tesla leveraged green finance to scale EV production. World Bank green bonds are bought by pension funds worldwide that want safe yet sustainable returns. So the message is clear here that finance is no longer colorless. It's now green tinted. Finance is no longer colorless now, it's green tinted. Now, can you all tell me just a simple question? Do you think green bonds in India are priced attractively enough to change corporate behavior? Or are they still just a marketing tool? Please answer. Do you think green bonds in India are priced attractively enough to change corporate behavior? Or are they still just a marketing tool? May I expect the answer? Do you think green bonds in India are priced attractively enough to change corporate behavior? Or are they still just a marketing tool? Pooja ma'am?
Yes,
Pooja
madam.
ma'am, can we
Yes,
take
madam.
5 minutes break, 5 to 10
Yes,
minutes
yes,
break?
please, please, madam, please. Okay.
Okay, ma'am. Thank you so much. So, welcome back. Am I audible? Am I audible?
Yes, audible. Yes,
Okay,
audible,
okay.
audible.
Okay. So, before going to break, I asked you, do you think green bonds in India are priced attractively enough to change corporate behavior, or are they still just a marketing tool? So, can you answer any one of you? I think,
I feel
uh,
it must be just a tool, I guess. I haven't worked on it, but according to
yes,
me, it is
yes.
just a tool.
Right now, the investors are demanding more ESG compliant portfolios. So, definitely pricing
Okay,
advantages will come. And being
okay, okay.
CMAs, we
Mhm.
must prepare to ride that wave. So, to sum up this section, green bonds finance specific environmental projects. Sustainability and blue bonds expand the scope. Sustainability linked loans rewards companies for performance. Carbon markets monetize emission reductions, and regulators are embedding ESG into finance. So, and in all these, from structuring to assurance of monitoring, the CMA's fingerprints must be there. So, as I told you, being CMA, we can lead the transformation. We have so many areas to practice, to give our advice, to give our expertise. It's not limited to only doing costing, it's not limited to only doing cost audits. We have many, many, many other areas also, emerging areas also. So, now, friends, we have seen the frameworks and finance. Let's ground this in reality. Let's look at case studies and best practices, companies in India and globally who are already walking the talk. Like theories are good, frameworks are important, but professionals like us live in the real world, and we are judged not by what we know, but by what we deliver. So let me take you through a set of case studies and best practices from around the globe and from India, where sustainability, ESG, and green finance are not just slogans, but hard business decisions. And I want you all to think that if you were CMA in that organization, which I am going to tell you, what would have been your role and what could you have been done. So, first case study is about Tata Steel, circular economy in action. So, what is this case study is all about? Tata Steel is one of the India's oldest companies, but also one of our most forward-looking. They have embraced the principle of a circular economy. And what does that mean? That means recycling and reusing waste as inputs. How they do it? For example, their steel making process generates blast furnace slag. Instead of treating it as waste, they now use it in cement manufacturing, and this reduces landfill, lower emissions, and creates an additional revenue system. So, can you tell me what will be the role of a CMA here? Being cost and management accountants, what will be the role here? What Tata Steel is doing, Tata Steel, while making steel, it processes generate steel making process, it generates blast furnace slag. And they're using that slag in cement manufacturing, which reduces landfills, lower emissions, and creates an additional revenue system. So, can you tell me what will be the role of a CMA? Okay, let me tell you. Role of a CMA will be the costing the byproducts accurately, calculating the life cycle environmental savings, and presenting financial plus ESG impact in integrated reporting. So, this is a classic case where sustainability reduces costs, creates revenue, and improves reputation. And the best practice here is waste is no longer waste, it's a resource. Second case study I will put you will be of Infosys. Infosys, what do they do? Infosys does energy efficiency and reporting. Infosys is another shining example from India long before SEBI made. Just a minute. Yes. So Infosys is another shining example from India long before SEBI made ESG. Like SEBI made ESG reporting in 2023, but before that also, ESG reporting mandatory. Infosys voluntarily published sustainability reports based on GRI standards. Now I hope everyone knows what are GRI standards. And what did they do? They reduced their per capita electricity consumption by over 50%. They shifted their campuses to renewable energy and invested in smart buildings with energy dashboards. And the thing is, they reported it with the same rigorous financial numbers. So, what will be the role of a CMA here? Calculating ROI on energy efficient buildings, developing internal carbon pricing, integrating sustainability KPIs into management reports. And what are the best practice here we can learn from Infosys? What gets measured gets managed. The best practice we learned from Infosys is what gets measured gets managed. So what does Infosys did? Infosys did ESG reporting way before as SEBI made it mandatory. They reduced their per capita electricity consumption by over 50%. They shifted campuses to renewable energy and invested in smart buildings with energy dashboards. Now I will come to Tesla and global EV push. This is the case study number 3. I'll let you know ki let's step outside India for a moment. Beyond India, what are the world is doing to manage their sustainability? Tesla is often seen as a car company, but it's actually a sustainability driven energy company. We see Tesla as a car company, but it's actually a sustainability driven energy company. Its entire business model is based on ESG principles. And what are they? They are clean mobility, renewable storage, and low carbon future. And what's interesting in this? Tesla doesn't just sell cars, it earns money by selling carbon credits to other auto manufacturers who cannot meet emission norms. We have already seen what are carbon markets and carbon credits. So I hope now you all are understanding what I meant to say, that Tesla doesn't just only sell cars, it earns money by selling their carbon credits to other auto manufacturers who cannot meet emission norms. In fact, some years, Tesla's profit came not from cars but from carbon credits. See, Tesla's profit came not from cars but from carbon credits. So carbon can be a new line item in revenue. Being CMA, we must understand that carbon can be a new line item in our revenue, and ESG can create new markets, not just reduce risks. So what we can learn from Tesla, that view sustainability as a profit center and not a cost center. I can have a So the next case study is all about HUL. I hope everyone knows what is HUL. It's Hindustan Unilever Limited. It's sustainable sourcing and social impact. HUL, as we all know, is a household name, but few realize how deeply ESG is embedded in their supply chain. They have a sustainable living plan which commits to sourcing 100% of agricultural raw materials sustainably, like tea, palm oil, and tomatoes. The social side is equally strong. Through projects on hygiene, sanitation, and rural women empowerment, they directly impact millions of lives. So, tracking cost of sustainable sourcing versus conventional sourcing, evaluating social programs not as charity but as investments in brand equity, and quantifying shared value benefits to businesses and society. So, what we learn from HUL? We learn that sustainability must extend beyond your factory walls into your entire value chain. And this uh, learning is given by HUL. They what do they do? They source 100% agricultural raw material sustainably. Along with their social side, they have projects on hygiene, sanitation, and rural women empowerment. Next case study is about SBI green bonds. Thus, SBI issued green bonds worth rupees $650 million to fund renewable energy projects. These funds are monitored under strict guidelines. Investors demand proof that money is used only for green purposes. So, as I already told you, who will verify whether the money or the fund is used for green projects or not? We only do. Being CMA, we only verify. We ensure transparent allocation of proceeds. We verify project level performance metrics, building trust between issuer and investor. So the best practice is green finance is about credibility. So numbers must tell a story investors can trust, and CMAs are the storytellers of numbers. Okay, if your client wants to issue a green bond, do you feel ready to assure investors that the funds are genuinely used for sustainable projects? Just a question. If tomorrow your client wants to issue a green bond, do you feel ready to assure investors that the funds are genuinely used for sustainable projects? Okay, so what do these case studies teach us? From Tata Steel, we learned waste into wealth. From Infosys, we got efficiency through measurement. Through Tesla, we got ESG as revenue driver. HUL tells us sustainability across value chain, and SBI tells us finance credibility through assurance. So each story carries a common thread, that is CMAs were or could have been central to success. Anyone want to add something? Okay, let me tell you one more thing about ESG. If we break ESG, if we break ESG, so ESG means environmental, social, and governance. So what does environmental means? This includes carbon emissions, renewable energy, waste management, and water conservation. For example, Tata Power has committed to 100% renewable energy by 2045. Tata Power has committed to 100% renewable energy by 2035. It's environmental. What is social? Social, this relates to employee welfare, diversity, human rights, and community engagement. For example, ITC's e-Chopal has empowered over 4 million farmers by giving them access to markets and information. And what is governance? This ensures ethical leadership, transparency, and compliance. Infosys has consistently ranked among the world's most ethical companies. A Harvard study showed that firms with strong governance practices deliver 23% higher shareholder returns over 5 years. So ESG isn't a side issue now. It directly impacts business performance. So see, through CMA lens we can see that Chandraghanta, the goddess which we worship on third day of Navratri, inspires CMAs to act ethically and decisively in ESG decisions. Knowledge empowers CMAs to take on strategic roles, lifelong learning, and specialized certifications in ESG, IFRS, sustainability reporting, and green finance are now essentials. For instance, a CMA who understands renewable energy project funding can guide management on the most profitable and sustainable investment options, turning knowledge into measurable impact. I hope I have made clear everything. Anyone want to ask anything can ask the questions. Okay, so we have challenges and opportunities also. What are they? Challenges remain inconsistent metrics. ESG ratings often vary widely. We have data gaps. Many companies struggle to measure scope 3 emissions, evolving regulations. Different countries have different reporting standards and skill shortage. Few professionals combine financial expertise with sustainability knowledge. But here lies opportunity for us, as I already told you. CMAs can fill this gap by becoming ESG auditors, consultants, and strategists. For example, the World Economic Forum estimates that ESG integration could unlock $12 trillion in new market opportunities by 2030, and this is where CMAs must step in. So, challenges like inconsistent ESG metrics and scope 3 emissions require courage to innovate, while opportunities like ESG auditing demand balance between reporting standards, investor expectations, and corporate strategy. Now, CMA leading the transformation. This is the big picture. CMAs are evolving from cost controllers to sustainability strategists. We align companies with the UN Sustainable Development Goals and India's net zero 2070 commitment. We ensure transparent ESG reporting that builds trust with investors. We connect financial returns with environmental and social responsibility. In short, CMAs are not just keeping score. We are rewriting the rules of the game to ensure businesses thrive in a sustainable economy. So, CMAs are champions of balance, profit, ESG compliance, stakeholder interests, and courage, adopting sustainability frameworks, green finance, and ESG linked investments. Just like Chandraghanta Mata, we must act decisively yet wisely. So conclusion is to conclude sustainability is now a strategic necessity, not an option. ESG adoption ensures resilience, profitability, and reputation. Green finance is the fuel that will accelerate the transition, and CMAs, with our unique mix of financial, analytical, and governance skills, are perfectly placed to lead this transformation. We are not just accountants of the past, but architects of a sustainable future. Sustainability is essential. Green finance is the tool. CMAs are the agents of transformation, embodying Chandraghanta's Mata balance and courage in leading responsible business. Thank you. Thank you so much for your attention. Thank you. Let us embrace the values of balance and courage in all our ESG and sustainability initiatives. Thank you for participating. Remember, the Shakti of knowledge empowers us, and the power of transformation drives us to lead responsibly. Let's embrace these values in our roles as CMAs and continue to transform the profession. I now welcome your questions and reflections on how CMAs can further lead the ESG and green finance transformation. I
Thank you so
welcome your
much, ma'am.
questions and reflections. If anyone having any question can ask me, or if having any suggestion can add, please. Okay, thank you so much.
Thank you, ma'am. हाँ वो तो पहला तो
It was a great session. Thank you.
Thank you so much. Thank you so much. Thank you everyone for actively listening and participating. Ma'am, shall I leave the group?
किट में अपने क्या
Yes,
दिया
ma'am.
है?
Yes, ma'am.
क्या-
हेलो। हाँ मुकेश। नहीं ऐसा नहीं।
Now we will officially conclude the session. Thank you, everyone.
Thank you, ma'am.